Okay, so now let's talk about a scenario where you have invoiced the customer for time and material related billing and they reject the invoice and you need to correct it. Or if you haven't sent this out to the customer yet, okay? If you want to simply get rid of the time and material invoice and start the process over, granted your month hasn't closed in your financials, and you can do that, you can come over here and delete the time and material invoice, for example. Okay, so any of the entries that are on this September 30th invoice down below will then be put back into the generate invoices screen in order for you to bill on or not bill on when you create the next invoice, the correction invoice to the customer. Okay, so time and material, if you delete, does restore whatever costs you had on that specific invoice to the customer. Now let's say that you have sent this to the customer, they have paid it, and then later you need to give them a credit for one of the costs on that invoice. So on the October billing, you want to show a negative accounts payable bill, for example. So let's say on a job, this project that you billed them for this amount at the bottom here, one of these amounts. And on the next invoice, you want to take the 600 off. Okay, if that relates to a specific vendor and that vendor has also given you a credit, then you're going to want to come in here to accounts payable and enter in a negative accounts payable bill, for example, like this one's showing. Okay, so if you don't do it as a negative AP bill and you do it as an AP adjustment instead, it does not flow through to the generate invoice screen in this section. So the AP bill, negative AP bill I put in does flow through as a negative cost. And then the marked up negative price. Okay. So the only thing you need to be aware of when you do this is that when you pay the bills, it's going to list that negative accounts payable as a separate line. Unlike an AP adjustment where it shows it in the credits available area. So when you're paying bills, you want to be careful that you do pick both the positive and the negative if you're going to use negative AP bills or have that happen. Okay. So just to point that out. Now, similar scenario, if you had a credit card transaction that you had previously billed to the customer and you need to show it on the next one as a negative credit card transaction, you could use the same methodology and go into the credit cards and create a negative transaction. Okay. Same with any of these others. You know, if you had a general ledger entry, miscellaneous cost, you push through to them on the prior billing and you need to come in and on the next billing create a negative, that is also available to do. So depending on where the invoice is in the process will determine how you correct the time and material billing, whether you can delete it or whether you can't delete it and you need to put in negative entries in order to get the next billing corrected, okay, with those negative entries. Okay, for progress billing, there is a different approach to progress billing. The first thing, though, is if you have sent the invoice to the customer and they have rejected the invoice, you can then do the same thing where you will be able to delete the progress billing or the AIA, just like the time and material. It will reset it back to the prior application. If you've invoiced it, they've paid it, or you can't delete it, maybe your accounting period is closed, and you want to do a negative adjustment through a correction invoice, then you need to do a generate invoice progress bill as a negative. Okay, so we're going to go here. We're just going to run the normal process. And instead of positive amounts on the progress billing, you would enter in negative amounts here, for example. Okay. Then the retainage is also going to do its percent negative retained adjustment. Okay. So if a good scenario in this instance would be if the customer has already paid application 14, but then on application maybe 13, they short paid it and you caught it after the fact, then you would create this as a, probably something like this, as a 13 correction or 13 revised reversal. And then when you receive the payment in the accounts receivable for application 13, you would pick application 13 and application 13 reversal so that it would net to what they actually paid you. Okay, so with progress billing, if you're a few ahead or they've paid and you need to correct a prior one, you need to come in and do negative numbers in the related lines. Okay, you create the invoice, and then your schedule of values would obviously be adjusted to reflect that correction. Okay, now with progress billing and schedule of values, if I'm correcting 13, 14 also needs to be corrected and redone, as well as we're on 15 now. So you would have to do post revisions to AIAs because of the way AIAs and progress billings flow through. If you have to fix one, you then have to fix the subsequent ones as well. So your total completed to dates work out. So a little more complex if a customer is paid or there's an adjustment that needs to be made and you need to go backwards in time a few months, a little more difficult.